All right, y'all, I've got 3:30. So I had the opportunity to take a look at all of your pro formas, work in process, and I saw a recurring theme. So I finally got smart and just did a copy and paste on the feedback I was giving you. The common theme was, of course, that your cash flow doesn't. That's the issue. Okay. So when last we spoke, we were talking about how your cash flow has to cash flow. So I'm just going to recap. I'm going to make this quite small so that everybody can see the big picture. And I know that it's small. I'll make it bigger when we actually start talking in detail, okay? So here's the deal. We're looking at your cash flow for the first year in your operation. In addition, I'm taking a period that I'm calling pre-startup. And I'm saying everything that happens prior to you opening the business, we're going to pretend like that happens inside of your first year of operations, okay? Now, whether it takes you 5 days to get your business ready, 60 days, 180 days, sometimes that happens. We're just going to call that period pre-startup, okay? So I've got a column here at the very beginning that's entitled pre-startup. And that's the period I'm talking about where your beginning cash balance is 0 and your cash in pre-startup consists of your equity investment and your loan proceeds, okay? You have no sales because if you had sales, you would be starting. Your cash out is going to really, really, really closely resemble your uses of funds, okay? So if you'll look at the tab that's sources and uses of funds, at the very least, all of the stuff that's on your sources and uses of funds, as far as the use of funds, all of those things need to be in there as a cash outflow pre-startup, right? So in other words, if I looked at beginning inventory, delivery vehicle, furniture, fixtures, and equipment, property insurance, and security deposit, all of those things are in my pre-startup. So minimally, anything that is in your sources and uses, minimally is going to be in that pre-startup column. You see I've got beginning inventory, delivery vehicle, furniture, fixtures, and equipment, property insurance, and security deposit. So there was at least one person that made an attempt at the cash flow but struggled on the cash flow. And the reason that that person struggled on the cash flow is they had not yet done their sources and uses of funds. Okay? So here's the problem. If you don't know what it's going to cost you to start the business, you can't possibly build a cash flow statement for the business because you don't know how much money you need to bring in to start, and you don't know how much you're going to have to pay out to start, right? So there was at least one person that struggled along those lines. Now, in addition, you see on your sources and uses of funds, for uses, I've got a line that we call working capital. Okay, I've defined working capital for you a couple of times. Working capital, the definition of it, the formula for it is current assets minus current liabilities, okay? And since we're talking about here, a sources and uses of funds, we're not talking about the balance sheet, which is where you would find current assets and current liabilities. Just know that this working capital that I've got highlighted right here and calling working capital is not the same as the working capital that we talked about in Chapter 8 when we were discussing financial ratios and managing your business, okay? It's just a catch-all term in this case. And in reality here, all that working capital means is it's the difference between those things that I've identified as uses of funds versus the things I haven't identified as uses of funds. So that's where I say minimally, your pre-startup is going to include all of the stuff that's on the uses of funds, but it may include some other stuff as well. Okay, that comes in from your assumptions. And that would be things like on my cash flow, my workers' compensation insurance. Okay, because in my assumptions, I told you that my workers' compensation insurance was going to be 3.5% of my total payroll for the year. Okay, 3.5% of my total payroll. My total payroll is 130,000, 120,000. I just put that number in there as a placeholder. That's not my final number, but I just put it in there to get something. And then my advertising expenses, I plugged in 12,000. Okay, because if you'll recall, I mentioned to you that I was going to spend 6% of sales on advertising, okay? Which in my case works out to be $5,000 per month, $72,000 for the year, something like that, okay? And that may not be the exact number that I said, but you get my point, okay? I'm spending $60,000 for the year on advertising plus $12,000 up front for my grand opening advertising, okay? So my whole point of this is that pre-startup column is really just sort of a rehash of your sources and uses of funds, okay? But there may be a little couple of other things thrown in, right? The general rule of thumb is if it's $1,000 or more, the bank is probably going to want to write a check to whoever you're spending $1,000 with, rather than just saying, oh, here, Ingrid, here's $5,000 cash. I trust you, go spend it on whatever you want to spend it on. Right? They're going to tell you, hey, I'll write that check to Hager Communications for your grand opening. Okay. That way they're assured that your grand opening is paid for, right? And that you do exactly what you're going to say. All right. Always, 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 beginning cash plus cash in minus cash out equals ending cash. Okay. Now it's not quite that easy because we've got different types of cash in and we've got lots of different types of cash out, right? So we need to put subtotals on our cash in and our cash out. So we have a row in there that says, this is my total cash in and this is my total cash out, okay? The formula here takes my beginning cash, D2, plus my cash in, D8, minus my cash out, D25, okay? If I highlight up here, it gives you the color, okay? It shows you in color. It's this one plus this one minus this one equals this one, okay? Always, 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 your beginning cash for the next period is your ending cash for the previous period. Okay? Does that make sense? In other words, we're treating pre-startup sort of as this artificial period that doesn't really occur this year, but we're pretending like it does occur this year. Okay? So the money that I have left after I do all of my pre-startup is going to be the same money that I start January with. Okay? I'll start with that amount of money and then I'll have my January cash in. I'll have my January cash out, and that'll give me my January ending cash, right? Beginning cash plus cash in minus cash out equals ending cash. Okay? Ending cash for January is always going to be the beginning cash for February. That's going to happen every single stinking month, okay? So you need to put a formula in there That formula starts here. It's simply take the number that's in the column just to the left at the bottom. I don't know what specific cell that is for your spreadsheet. I know what it is for mine. It's D27. I've got a formula in there that says, go to cell D27 and make cell E2 equal D27. Okay? And because that formula never changes, I can copy that formula all the way over to December. You can't copy that formula to the total column. Okay? The total column is something different. When we say total, what am I considering? I'm considering the total cash flow for the period, right? The entire period. And remember, that period started with that artificial time at the beginning that we call pre-startup. And if I want to consider my total cash flow for that entire period plus that pre-startup, what's my beginning cash? Don't everybody jump in at once. This is another gotcha. Some of you tried to say that it's equal to P27, and it's not. Some of you tried to say, well, he told me in this column that I'm going to total everything up to the left of it, right? And you went in here and you put in Q2 a formula that said take the sum of cell D2 all the way through cell P2, and you try to put a total in that. That doesn't work, okay? That total column is the total cash flow for the entire year, okay? And what was the beginning cash flow for the year, or the beginning cash balance for the year? It's 0, okay? Now, at that point, when you've got that handled, you can then total everything across. And the best way to do this, I saw some of you would come in here into cell Q5, and you would say, go over here. If I'm in Q5, go over here to cell D5 and get that number. And then you would come here and say, go to E5 and get that number. And you'd say, here, I've got all of this stuff happening to the left of it. So let's put in a formula that says equal parentheses, sum, colon, D7, colon, P7, in parentheses, right? In other words, you had a formula in there that looked like this. Equals the sum, parentheses, D7, colon, P7, okay? The reality is that once you get down here and you're looking at your cash inflows, I want you totaling those all the way across and down, okay? So the formula in your totals column is going to be everything to the left of it, okay? So your formula needs to encapsulate all of those cells to the left of it, okay? When you get here to total cash inflows, right, I don't want to lose that. When you're looking at your total cash inflows, remember we're totaling everything to the left of it, and we're totaling everything down, right? So we're totaling stuff across and down. When you see the word total, as the blue collar comedy tour would say, here's your sign, right? It's funny that you can make $1 million saying, here's your sign, okay? But here's your sign. Total cash inflow, what am I talking about? I'm talking about my cash inflows, which before I start would include my loan proceeds, my equity investment, and that's it, because my 0 for sales is in there, because if I had started, I would have sales. I haven't started, so I have a 0. So in these cells, you're summing stuff up. Okay? And this formula is going to be the same all the way across to your total column. Because what we want to do is we're totaling our cash inflows for each individual month, and we're totaling our cash inflows for the period. Okay? So this formula right here, 05 to 07, is the same as this formula here, except that's P5 to P7. And it's the same as this one here, or that's Q5, I'm sorry. Then this is 05, this is N, M, right? You see the formula's the same across, okay? I found a lot of errors in that. Here's your check on this to make sure that you've done that part right. Highlight that cell, click and drag everything that you're totaling to highlight it. You see how I've got those cells highlighted? I know that you can't see this down at the bottom. Folks that are on Zoom probably really can't. But you see that that number is $2.3 million. Okay? If that does not match what's in your total column, and it does, right? I'm saying that all of this stuff here has to match that right there. Okay, because if we're summing down and then summing across, shouldn't it be 2.3 million? Shouldn't it be the same? Okay. So now we've got our total cash inflows. Okay. Our cash outflows. Remember, some of those things are coming from our sources and uses of funds, specifically our uses. I've got those recorded. And I've recorded some other stuff. And yeah, could I go into my sources and uses of funds and put in workers' compensation, insurance, whatever that number is? Yes, I could do that. And could I go in and put in grand opening advertising? Yes, I could do that as well, so that I would be more specific, right? What do I do here for the total cash inflows? I sum up everything above it that is a cash outflow, right? I said inflows. What do I do for total cash outflows? Here's your sign. You total up all of your cash outflows. And your formula for your total cash outflows is always going to be those cash outflows that are above it. Okay? Similarly, in your total column, the number that's in that total column is going to be all of the stuff to the left of it. Correct? D11 through P11. E11, or excuse me, D12 through P12. D13 through P13, okay? So this column has the sum of everything to the left of it, okay? Then the formula here on your total cash outflows is exactly the same as your monthly cash outflows, because we're totaling up the stuff that's above it. Make sense? I know this is repetitious for some of you, because some of you just absolutely nailed it, but just know, okay? Same thing, y'all. If I'll highlight all of my cells for the entire 12 months plus the pre-startup period, I'm highlighting every time that I have a cash outflow. What shows in all of these cells is $1,942,943. Okay? Is that equivalent to this number that I'm hovering over? 1,942,948. 1,942,948. That tells me I haven't left any cells out. Okay? And then your final row here is your ending cash. And that's the real easy formula. Beginning cash plus cash in minus cash out equals your ending cash. Okay? And that formula is identical. I mean, it is identical every period. Okay? And it's even identical for the total, because it's always going to be beginning cash plus cash in minus cash out equals ending cash. Some of you simply made the mistake of putting the wrong number for your beginning cash on the total. Your beginning cash on total is 0. Okay? You with me? Questions about any of that? And Tara, Jake, Jose, y'all good? Jose, you did a great job on yours. I remember that specifically. I don't mean to single anybody out, but it did impress me that you did a good job on it. Okay.
Thank you.
So here's the deal. I don't know why that's doing that every time I stand up. Your ending cash in your total column has to, by definition, equal your ending cash for the month of December, right? Because our ending cash for the total column is really our cash for the entire year. And December is simply the most recent month in the end of the year. If those two numbers are not the same, you've got a problem, okay? Probably half of you in the room, probably 11 out of 22, if you got a message that said, you've got a problem on your cash flow, I'll show you how to fix it, but fix it before you go forward, okay? That's why I've just spent the last 20 minutes talking about that. That's how you fix it. I'll upload this video in the morning, okay? Yeah, I'll remember to do it. The reason I don't do it on Thursday or Wednesday night, whatever today is it takes until about 5:30 for Zoom to finish uploading the video to the server. And then in order for me to upload it to YouTube, I have to download it from the server and then upload it to my YouTube account. And if I'm doing that at home, I'm using my bandwidth. I'm using my personal computer, which sort of makes everything on my personal computer at home subject to the Freedom of Information Act, which I don't really like. In other words, they could subpoena my computer because I've done work on my personal computer. I don't really like that. So I come in the next, plus my internet at home is a lot slower than what we have here. Okay. So it takes me 10 minutes to download the Zoom video and probably an hour and a half, maybe, to upload it at home. From here, it takes me a minute to download it and maybe 5 minutes to upload it. Okay. That's the reason that it's Thursday morning before I upload the video. But for the three of you who said, are you going to make it available? I did what I said, it was available. Okay. But if you look and it's not there, feel free to prompt me. Okay. Questions about this part? Royal, are you good? Okay. Ashley, you made a lot of progress on yours. Are you good? Okay. Ashley, I know you're good. Okay. Rianne, you good? Ranella, you good? Think so? No? Can we fix you now or do we want to fix you later? Okay, we'll fix you later. Okay. Keep in mind, y'all, the reason I'm trying to make sure everybody's on the same page, this thing is cumulative. To that end, I've told you why this total column is important. Number one, we've checked to make sure that our cash flows, right? If those numbers aren't the same, we've got a problem somewhere on our cash flows. Okay? So those ending balances in the last two columns have to be the same. If they're not, Don't try to do anything else until you fix it, okay? Second reason they're important, these numbers in this totals column become the starting point for our income statement, okay? There's some stuff I've got to plug in there for you, okay? For example, there's some expenses that I didn't treat correctly, like wages and salaries. I just put a number in there so that you would see that it calculated my payroll taxes automatically and that it calculated my workers' comp automatically. But my wages and salaries are going to be different than 10,000, okay? So in your assumptions, you should have what your wages and salaries are going to be. I'm going to have 6 employees, okay? 3 commissioned salespeople make 20% of their gross profit on each sale. 1 office manager makes $48,000 annually. 2 delivery drivers make $12 per hour and work 40 hours per week. So I've got people that are paid 3 different ways, okay? I could, in my cash flow, have a column that says, or a row that says wages and salaries. And then underneath it, it is perfectly acceptable to do office manager, commissioned sales, and delivery, okay? If that makes it easier for you, do it that way if you have people that you treat differently. And what do we know? For wages and salaries, I'm going to have absolutely nothing in that row, okay? But for office manager, for all of them, I'm going to assume nothing happens before we start, but that's just a rather simplistic assumption. For office manager, that person makes $48,000 per year, okay? $48,000 per year is equal to $4,000 per month. So I put 4,000 in every month. Let's take the delivery drivers next, okay? I've got 2 of them. So here's the way I'm going to work it, okay? I'm going to take 2 drivers, put in a formula that says take 2 drivers. I can make this bigger. So that you guys can see it, okay? I've got 2 drivers that make $12 per hour, that work 40 hours per week, right? How many weeks are in a year? 52 weeks per year. How many months are in a year? Divided by 12, right? That means my delivery drivers together are going to make $41.60 per month. And that's every month. Okay, so I copy that formula all the way over. Okay? The last one that I have to deal with is my commissioned salespeople who make 20% of their gross profit on each sale. I have to calculate that. Okay? How do I calculate that? I put in a formula that says take your sales, subtract your cost of goods sold, and multiply that times 20%. Okay? So my commission salespeople make 20% of my gross profit. And that varies from when I start, 17,640. They think that they've tripped and fell into a gold mine. When I have my dead cat bounce, right? When I have my dead cat bounce, my 3 employees are splitting $7,000 a month and they're hating me. Okay? When 3 employees are splitting $18,000 a month, they're pretty happy. That's 72 grand a year each. When they're splitting $7,000 a month, that's what, $28,000 a year, right? But what am I doing by paying commission salespeople? I'm trying to provide a dual incentive, okay? Commission salespeople have to have some degree of flexibility with regard to the way that they price product. Otherwise, they're just order takers. So in a business like this, you do get commission salespeople that can negotiate a little bit on price. But I need to give them an incentive that aligns with my incentive as the owner of the company, which is to maximize gross profit. Because if they maximize gross profit, they in turn maximize their earnings. So I'm trying to get them to keep my gross profit high, but also to make more sales, because the more sales they make, the more money they make, right? So it's a twofold incentive, okay? To calculate that commission sales, I just took the sales minus the gross profit, my sales minus the cost of goods sold. That gives me my gross profit, and I multiplied it by 20% because that's my commission percentage. That's fairly standard in retail, okay? If you get into retail, you'll find most furniture stores, most car dealers, most clothing stores, if they pay by commission, they're going to pay about 20% of gross, okay? Questions about that? So now I've put sales, I've put my payroll in there, and I need to do my payroll taxes. My formula that I had doesn't work anymore because I said go up to D18. My formula needs to be D19 plus D20 plus D21. Okay, so I'm going to sum up my payroll and multiply that times 11.15% and copy that all the way over, okay? So I'm calculating my payroll taxes every month. And you'll remember in my assumptions, payroll taxes equal 11.15% of payroll expenses paid immediately when they're incurred. So the same month I pay the payroll, I'm paying the payroll taxes, okay? But payroll taxes vary because wages vary, okay? Make sense? All right. There's another thing that I did not put in there as a cash outflow. I noticed it when I picked up my assumptions over here. I'm going to take a monthly draw of $5,000 beginning after 6 months. So I need to go in there and put owner's draw. First 7 periods is going to be 0. For the next 6 periods, it's going to be 5,000. There's no magic number. There's no magic to what I did there. Okay. All I'm simply showing is that I don't anticipate going in there and immediately taking money out of the company. If you'll recall, equity comes from 2 places. It can be invested and it can be earned. When I start taking out equity in the form of a draw, my equity is going down, okay? So I want to make sure that I have at least enough earnings to offset what I'm drawing. Because I inserted a row, I need to make sure that my formula is correct, make sure that I've got everything above it, and I do, okay? Make sure that that's the same, okay? Y'all hold on, I'm moving you to the other side. I need to make sure that I've got my cells totaled. And I've made changes, right? I need to make sure that these numbers are the same. Again, they need to be exactly the same. The 4-cent difference that you see here is simply rounding, okay? I noticed that some of you wanted to wow me with your ability to format cells. if you want to wow me, if you want to impress me, get the spreadsheet right and make it easy for me to grade. Okay? And this is going to sound like I'm straining at a gnat, but there's a very specific formatting that I want you to use. Some of you went in there and you put dollar signs and you put decimal places. And you said, I'm going to show you that I get this right to the penny. I've seen people spend hours chasing pennies. Okay? I mean, we are talking about a forecast a year in advance, right? Dollars are fine. No dollar sign is necessary. I know every one of you is starting your business in the United States, so you don't have to tell me you're doing business with dollars. I want you to make it as easy for me as I can possibly be. Remember, I'm an old dude. Every time I come into class, when I'm taking roll, when I'm working here, what do I have on? Okay. The best way that you can make it easy for me and wow me is to format your cells in number format with no decimal places, using the comma to separate your thousands. Okay. What happens when you do that? Now I have my numbers lined up. They're aligned correctly. I don't have this happening, right? Do you see how much more difficult to read that is compared to that? Okay? It's just not necessary. If you wanted to put $1 as a placeholder at the top of a spreadsheet, that's fine. But that's not what the purpose of the exercise is about. It's harnessing the power of Excel. You can make it pretty. For me, God, I sound like such a dude when I say this. Y'all are going to laugh because I realized before I said it what it sounds like. Easy is better than pretty. Sorry. I don't mean what you think I mean. Okay? It sounds like a dude, right? I want it to be easy for me to grade. Because trust me, y'all, just please trust me on this, okay? The best way for y'all all to get good grades on this is, number one, stay on track. Number two, nobody cheat, because I get really pissy when people cheat. I'm sorry, that's not a nice word. But if I suspect people of cheating, I'm getting really pissy. And number three, make it as easy for me to grade as possible. That means make it easy on these old eyes, right? If I don't have to print your statements, that's great. But most of the time, particularly if you've got a problem, I have to print your statements. And if I have to take a magnifying glass to print your statements to read what it says, I'm really unhappy, okay? Because I can't help you. So to that end, right, a couple of you turned in PDFs of your document. I couldn't give you any feedback on how to fix any errors that you had because I can't see what's behind the PDF, right? So if you'll turn in an Excel every time that we're doing the work in process, I can give you feedback, okay? There's one more thing that I haven't done. And y'all, the reason I haven't done this is I just stinking hate it. I wish that there were a really good way to do it. Every time that I think I found the answer, I use this and it just doesn't last. It doesn't have the staying power, okay? This is a loan amortization schedule, and I've been 40 ways around the sun, okay? If you look at your cash flows, you will see every month the interest that you pay on your loan goes down a little bit every month. Every month, the principal that you pay on your loan goes up a little bit, okay? The reason for that is your loan is amortized, and probably you have a daily add for your interest rate, okay? So when you make a payment and you reduce your principal, the amount of your interest changes for the next month, okay? And if you'll take a look here with me and see 917, 911, 905, 899, you would think it would be 893, but there you got some pennies behind the scenes. 894, 888, 882, 876, 870, and so on. In other words, principal is going down, or interest is going down roughly $6 every month. At the same time, the principal is coming up roughly $6 every month, okay? In order to make that happen, you have to calculate what's known as a loan amortization schedule, okay? And I would love to tell you that Excel has a wonderful tool that's always going to be there. There is one in Office 365. For whatever reason, this thing gives me fits, okay? I have a tab in here that says loan amortization schedule. If you will go to your internet browser and search for Excel loan amortization table, there is one, or the last time I looked, there's a template, okay? Simple loan calculator and amortization table. Maybe, just maybe this will work because it's dated since last time I tried to do this, okay? So you can do that and you can download this sucker, okay? What do you want to do with it? I'm gonna save it on my desktop so I can go back and get it, okay? So there it is, it's saved on my desktop, and now I can open the rascal, okay? And when I open it, it gives me a simple loan calculator. Do y'all see what I did there? Lintera, Jake, Jose, y'all good? You see what I did there? I don't think y'all did because you probably couldn't see I was on the internet when I did it. I'm sorry. I forget that your screen doesn't change automatically. I simply opened up a browser and I said Excel loan amortization table, okay? And I found the one from Microsoft Office, okay? It's result number 2. If you search exactly for Excel loan amortization table using Bing, it's the second result, okay? You click it, it's going to tell you, hey, this is what it looks like. Do you want to download it? I'd love to tell you that this is going to work and that it'll last through the duration of this assignment for you. I've had that not happen before, okay? In other words, something went haywire and it didn't work. I downloaded it. When I downloaded it, I told it to save it to my desktop. Okay, here's the file. And then when I was done, I opened it and this is what I got, okay? So what is it telling you? It's telling you that your loan amount is $5,000. That's a plug-in number. You plug that in. You plug in your interest rate, you plug in the number of years, and you plug in your start date, and it tells you how much your monthly payment is, how many payments you have, what the total of your interest is, and what the total cost of your loan is. Okay? The good stuff is down here below it. We need to know how much our payment is, but what we really need to know is how much is our principal and interest each month. Okay? So here's what I'm going to do. I know it came from the internet. It's telling me that it may contain viruses, but I'm going to enable editing. I'm going to click up here in the upper left-hand corner of my spreadsheet. Okay, right there. Not in any column, not in any row. I want to select all columns and all rows. Okay. To highlight the entire workbook, I'm going to copy it. I'm going to go back to my spreadsheet, Pro-Forma exercise, fall 2020. I'm going to create a new sheet, and I'm going to paste it, hopefully. Okay, I just hit Control-V to paste. Now it's got some wonky, crazy formatting. I don't give a darn about that. Okay, I just copied it in there. Okay, I do care that it's not showing me my decimal places there. So make sure it does right when it copies for you. Okay, now I have a sheet in there that I can call loan amortization. I'll rename it down at the bottom of my workbook. Okay. Folks, I'm not grading you on what that tab looks like. I'm just giving you one means to an end. Another equally viable option is to go to bankrate.com, sort through all the ads, and find a loan amortization table, run your loan amortization, and copy and paste the cells over. Okay. The problem with doing that is every time that you change your assumptions, you have to change your loan, which means you have to go in and recopy it. I'm trying to get you out of that, okay? In the natural order of things, the loan amortization has to happen before I do my cash flow. So I'll put it just to the left of my cash flow. Let's go back to our assumptions, okay? The business borrows $375,000 in startup capital. The term of the loan is 5 years at 6% interest. If I go to my loan amortization and I change my amount to $375,000 and I change my interest rate to 6.0%.
Can you share that screen, please?
Yep, I can. Thank you.
Thank you.
If I had done that correctly, see, it didn't automatically calculate it. See the problem? Okay. Okay, let me do that again. Insert. No. Let me go back here. I'm gonna try copying this one, y'all. Copy. I'm gonna go here to my correct spreadsheet and paste. Okay. Let me see if it makes the changes now. Long period, 5 years. For whatever reason, that spreadsheet worked. The other one did not. Don't ask me why. They both came from the same place. Okay. Don't ask me why. You can't get it to copy at all? Pull your mouse down and I can't understand you. You don't have Excel? Okay, then you missed step 1 of this assignment, which is get Excel. And you can get a free copy of all of Microsoft Office. I'm not opening your documents in Google Docs. It's got to be done in Excel. Excel is the gold standard for business computing. So as part of you being a student here, you have access to a free version of Excel. Okay.
So why did you get this loan?
This is the one that I used last month. I'll tell you what I'll do. Just to make it interesting for you, I'll give you this copy. Okay. I'll upload this copy as a separate spreadsheet in D2L so that you can download it. Maybe it'll work for you. What I'm finding is it's got gremlins, y'all. Okay. If this one works, that's wonderful. I've had mixed results. Okay. Why do I need to do that? I need to know how much my scheduled payments are, but more specifically, I need to know my principal and interest. Okay, so on my cash flow, my principal payment is going to start here. I can actually tell Excel to go to my loan amortization and pick up my principal for month 1. And it copies that number over. Unfortunately, if I then do that, it gets confused, right? Because it's thinking I want to copy the cells across, and that's not what I want to do. Okay, so what I'm going to do here is I'm just going to copy and I'm going to paste that. Just know this, I can paste it in there, but I have to change 1 digit. Okay, I started at H12. The next one's going to be H13, H14. Okay, so when I copied it in there, I need to change that to H14. Okay, H15. There's another shortcut that I can show you. This is a really easy one. If I'll copy the first 12 cells for my principal, I can right click and hit copy, go to my cash flow, click on my first month, right click, select paste special, and do values and transpose it. It copies it all over. But the problem is when it does that, it's copying the value. So if my numbers change on the loan amortization, they don't change on my cash flow. Right? You see what I'm saying? If I change my amount of my loan, this is a number. Okay? The preferred way to do it would be to go in here, right here, and say, go to loan amortization, H12. Go to loan amortization, H13. Loan amortization, H14. Okay? Just in the interest of time, because I want to be on the cash flow, on the income statement before the end of the day. Okay? I'll take the interest. I'm going to do the same exact thing. I'll pick up those 12 months. Go to the first month interest, paste special values. That tells I want the numbers, okay? And I want transpose. That is the only way that you can get exactly what's there to show up here, okay? The values means go pick up the number that's in that cell. Transpose means, yes, dummy, I know that they're up and down, but I want you to transpose them and make them left and right. Okay? That's the shortcut to getting those numbers in there. The long cut, the preferred way to do it, as I mentioned, right, is to actually put a formula in there and say, go over there and get that. Okay? Now, you guys see that I have a problem. I've done something that has thrown off my cash balance by $5,000. Okay? Let's see what that might be. Yeah, that shouldn't be.
If you look at your total cash outflows, mine did the exact same thing. The totals.
Yeah, that total didn't pick up. Yep. It should be minus this right here should be the sum through Q28.
And all the way across, it doesn't work either.
Yeah.
I thought it was weird. Usually I enter or something.
Okay, here's the best way. Here's the best way I can show you how to diagnose those problems. Again, get all of the cells that represent a cash outflow. Sum those up. $2,188,059. Is that the number that's in my total cash outflows? The answer is yes. Okay. Make sure that these are copied all the way across. Okay. So when I did that, it fixed it. For some reason, right? For some reason, 5 of these boogers did not go all the way through cell 28. It's that one, this one, this one, this one, and this one. For some reason, it picked up the first one, but it didn't pick up these. Okay. Again, you got to make sure before you proceed that your cash flow flows. Camilla, you good? You were okay. You good here? I'm throwing a lot at you. Remember, the videos will be online. Okay. Okay. So there you go. So now my cash flows flow. I filled in most of my blanks. I may go back and make some adjustments here or there, right? I may make some adjustments here or there, but for the most part, I'm fairly satisfied with it. Some of you got a little bit, we'll say messed up on your pro formas because I asked you questions like, do you really think that you can take a $50,000 investment and turn that into $800,000 in cash in the first year? Yeah, I mean, Mac's been around the block a time or two, right? He's almost old like me. If you could take $50,000 and turn it into $800,000, that's a 16-fold return in 12 months. Wouldn't everybody be in business? So in business, there's what we call the sniff test. Does something smell fishy, right? So just remember, you have the industry standards for your business that show whatever the net profit is. For my business, the net profit average is 4% of sales. Okay, it shows me that in the IBIS World Report. Okay. So I'm okay with it being $100,000 or so in the bank because essentially what I did is I took $125,000 that I invested into the business. Over the last 6 months of the year, I took $30,000 out of that, y'all. You see here, I took $30,000 out of that. Okay. Meaning that my real investment went down to $95,000. But at the end of the year, I've got $111,000 in the bank. Okay. So you see my numbers are not grossly fluctuating, right? I'm not saying I'm taking $125,000 invested into this business, and at the end of the year, I'm going to have $3 million bucks. Some of that for you is very simply you're wildly optimistic about the amount of money that you think you can generate in the business. And probably the rest of the story is that you have grossly underestimated your expenses. Okay. Make sense? All right. I see that I left utilities out just for the sake of moving along, y'all. I'm going to put $5,000 a month in there for utilities. And I know that that's not accurate and it has no basis in fact, and I'm just pulling that number out of thin air. Sorry, I'm trying to move along. Okay. All right. So I've put a number in there. I've got property insurance, security deposit. As I'm looking at this, I realize I've got something else that I've missed. If I look at my assumptions, property taxes are $29,000 per year, payable in December. If I go back to my cash flow, I've got property insurance, I've got my security deposit, but I don't have property taxes. So I need to insert a line, put property taxes, come in here to the month of December, plug in my number, $29,000. Make sure I get my formula copied. Make sure I've still got the correct amount of money. And does my total column equal my December ending column? Now, y'all, I'm just going to be honest. This is a lot more realistic. I take $125,000 investment. I pull $30,000 of my own money in it, out of it, and I turn it into $22,000 at the end of the year. That's just kind of the way things really do work in business. It reminds me of an old joke. Y'all know I'm an old farm boy. How do you become a millionaire farming? You start with $1 billion. Y'all will get that later. In other words, you're going to have negative cash flows. I'm not getting bent out of shape about these numbers, not at all, okay? Doing your pro forma statements is very much a trial and error process. You will go through multiple iterations, okay? Your numbers should have some basis in fact. We're just kind of pulling these numbers out of thin air. But I hope what you get is that you capture the gist of how those numbers become created, right? Okay? Now, what you absolutely cannot do on this assignment, first of all, let me say this. I'm not grading you on the basis of whether your business is profitable. If your business loses money, that's perfectly fine. I don't care. I want you to have the formulas right. I want you to have the knowledge. That's much more important than whether a hypothetical business that you may or may not start loses money or makes money, okay? I want you to have the formulas correct, so I'm not grading you on profits or losses. So don't think that the more money you make, the better your grade's going to be, okay? Because the opposite may be true. If you have numbers in there that are so wildly optimistic and completely baseless, I may dock you on that, okay?
Can you go over property taxes again, please?
Yes, I went to, it's in the video from 2 weeks ago, where I went to wichitatax.com and I looked up the legal description for that property and said, this is the legal description for that property and it's $29,000 per year. And then I put it into my assumptions. It's just that I forgot to put it into my cash flow. Okay,
I have a question.
Mary?
Like you were saying, can we adjust our numbers if we, because we are just kind of using them.
Yep.
So if I'm thinking, oh my gosh, this is not enough or
Right.
it's too much, I can.
You can adjust your numbers, absolutely.
Okay.
But just make sure, okay, if you adjust your numbers in one place, I'm trying to give you the spreadsheet such that the numbers are going to change everywhere, but also what's not going to change is your underlying assumptions. So if you change your numbers, you better go back and change your assumptions, right? Because it's consistency. That'll kill you every time. So I started to tell you, and then I lost my train of thought, and then I regained it, okay? I'm not judging you based on whether you make money or lose money. But what will get you on this cash flow is if your cash balance goes negative. That means that you didn't borrow enough money or you didn't invest enough money. So let's say that you're 6 months into this business and this number is negative $79,000. I'm not going to let you get by with that. I'm going to dock you pretty harshly on your points. Because what happens if you're $79,000 overdrawn at the end of 6 months, you're bankrupt, right? So you need to change your assumptions to fix it. You can see pretty clearly, y'all, up at the beginning, I've got positive cash flows, but once I hit my dead cat bounce, right, I've got negative cash flows to the tune of about $19,000 a year. every year, then 15,000 and then 15,000 and then 16,000. But I start to come back towards the end of the year and boom, I get hit with the property taxes. Okay. Normal fluctuations in your cash are acceptable. What's not acceptable is going negative. Okay. All right. I'll share this loan amortization table with you. I promise. Okay. I'll put that in D2L so that you can copy it and paste it. Okay. We got to create a new tab. This tab comes after your cash flow and is called income statement. You remember I said this totals column here is the starting point. This totals column is the starting point, okay? So to make things really, really easy for you on your income statement, I'm simply going to say, go over here to my cash flow and whatever's in all those cells, just bring that over here, okay? And I've got to do some stuff here, and I'm just putting in a formula that says go over there and get that stuff, okay? Okay, so on my cash flow, I actually copied the wrong cell, y'all. Went to B. I should have done A. Okay. So I'm going to go here and get A. And then I'm going to copy that all the way down. Sorry about that. All the way down. Okay. And I've got some cells that have zeros in it. All I'm doing here, y'all, all that I'm doing is I'm copying what's in those cells on my cash flow into the corresponding cells on my income statement, right? Because remember I said your income statement starts with your cash flow, okay? So I just put in a formula that said, go to my cash flow cell A2 and get that, okay? And then I've got plus cash inflows and nothing copied from there, right? Because of the way I've got my cells staggered. Okay. And then I could come in here and do that, right? I'm just copying the cells, the labels on the left-hand side. That's all I'm copying.
So it's not a good idea to just copy and paste?
No.
You're saying the data
Yeah.
equals-
I'm doing it a specific way
Just in case you do change your cash flow.
because if you change your cash flow, it will change here, okay? But the other reason that I'm doing it like that, and that's a great point, Mary, is I really want the numbers. That's what I care about the most is the actual numbers, okay? And I don't know how I got off here, but those things are not right, okay? Okay, cash flow, then payroll taxes. I'm just copying labels, y'all. That's all I'm doing. If you want to type them, that's fine. Okay, that's fine. All right, so here's what I want you to take away from that. If I look at what's in these cells right here, now what do I have? I have exactly the same stuff that's in these cells right here. Okay? Those cells right there on my cash flow are exactly the same as these cells on my income statement. Okay. Remember, the reason I'm doing this, y'all, is very, very simple. The starting point for your income statement is the total column on your cash flow. Okay. So for this particular column here, I'm going to tell it to go over to my total column here. And I want to start at the very top. And I just want to copy that all the way down. Okay. Note, y'all, when I did that, okay, I didn't copy numbers. I said, go to my cash flow and get what's ever on my cash flow cell Q26 and bring it over here. By the way, I just found a little mistake and I don't know what happened here. Oh, Q 20, 21, and 22. Okay. Okay. I just said, I want those numbers. And what I really want is whatever the calculated value is for my total column. I want that calculated value to appear on my income statement. Okay. But you keep in mind here, the magic on financial statements is knowing what goes where. I've mentioned this to you a couple of times. There's stuff on my cash flow statement that doesn't go on my income statement. I've put it there, right? But I have to take it off because that's only the starting point. There's stuff that's not on my cash flow statement that is on my income statement. And obviously I don't have it on there, so I have to put it on there, right? Make sense? Okay. All I'm saying is I want to take this cash flow statement, y'all. I just want to take this cash flow statement and I want to copy over the values, or the calculated values, such that what I have in my totals column here is the same as what I have in my total column there. Okay. Now keep in mind, nowhere on an income statement does it say cash. The word cash does not appear on an income statement, period. The word cash appears on a balance sheet, but it never appears on an income statement, okay? The word equity investments never appears on an income statement. The word loan proceeds or bank loan never appears on an income statement, okay? So stuff that should not be on the income statement can disappear, okay? Do we have a total column? No. Do we have the term cash? No. Do we have the term plus cash inflows? No. Do we have bank loan or owner's investment? No. So all of those things get to disappear. Total cash inflows, does that include the word cash? So it disappears, right? Minus cash outflows, that contains the word cash, right? Can you imagine what happens to it? It disappears. Okay. Total cash outflows, what happens? Disappears. Ending cash, what happens? It disappears. So all I'm left with now is some of the stuff that's relevant for my income statement. Okay. Y'all remember the general format for an income statement, right? Let me see. What y'all's view? This is what y'all see, okay? If I write it right here, people at home should be able to see it, okay? The general form for an income statement is this: sales minus cost of goods sold, if you have them. Some of you don't. Okay. Sales minus cost of goods sold equals gross profit minus your operating expenses equals your net profit, right? Are you with me?
You got it right on that side.
I got to write it over here.
Yeah, right here.
Oh.
No, in the middle. In the middle.
Ah, here, okay. Sales minus COGS equals gross profit. I'm really abbreviating. Minus operating expenses equals net profit. Right? That's nothing new. That's nothing new. But in these numbers that I copied over, do I have sales? Do I have cost of goods sold? Right there, right? Do I have some operating expenses? Yeah. Do I have some stuff on there that aren't operating expenses? Yeah. Okay. Let's start making this look like an income statement. If I take this row and I cut it and I bring it in here, okay, and I change this to, instead of my label, minus cost of goods sold, okay, and I put in a row that says gross profit, and I put in a formula, if I could spell gross profit, if I put in a formula that says, to calculate my gross profit, how do I do that? I take my sales and I subtract my cost of goods sold. Does that make you feel a little better? Is that looking a little more like an income statement now? Oh yeah, I probably need to put the underline in there, right? Put a cell border in there so that it looks more like that. And if I put a header here that says operating expenses, does that make you feel a little better? Now there's some stuff here that's not operating expenses, like beginning inventory, for example. Your beginning inventory is not an operating expense. I'll talk more about that when we get to the balance sheet, but you remember what my assumption was? I was going to have 104 days worth of inventory. I bought that in my uses of funds. That's the $312,000 worth of inventory. That's why I calculated my daily cost of goods sold, so I could calculate how much inventory I have. Guess how much inventory I have on day one? 312,000 when I'm open. How much inventory do I have on 365, day 365? I've got 312,000, right? What I'm doing is I'm reordering every time I sell something. So my beginning inventory never goes up or down. It's always the same. Beginning inventory doesn't show up on your income statement. Oh yeah, delivery vehicle, that doesn't show up. But what does show up is depreciation of delivery vehicle, right? And FF&E doesn't show up, but what shows up? Depreciation of FF&E. Okay. And how do I make that right? Well, I told you that my delivery vehicle depreciated straight line over 7 years. So if I'll divide what's in there by 7, it becomes 5,000. That's my depreciation expense. I told you my furniture, fixtures, and equipment depreciated straight line over 5 years. So if I divide that by 5, okay? My property insurance is an expense. My security deposit is not. It gets deleted. My property taxes are an expense. My utilities are an expense. My wages and salaries are all expenses. My payroll taxes are an expense. My workers' compensation is an expense. My advertising is an expense. My interest expense, believe it or not, is an expense. My principal is not an expense. Reducing the amount that I owe the bank, that's not an expense, okay? The only way you make that as an expense is if you count when you get the loan as income. Don't do that. Believe it or not, I've seen businesses do it, and it's one of the dumbest things you can do, okay? Is rent an expense? Yeah. Owner's draw, is that an expense? No. So I delete it, okay? If I come in here now and put total operating, and I know my formatting's not right, I'll fix it. And I sum up all of the stuff that's above it, all the way up to the very top of my expenses. You see my operating expenses now are $720,000. Going back to my formula, sales minus cost of goods sold is gross profit. Gross profit minus operating expenses is net profit. That's at the bottom, right? Okay. What's my formula for net profit? Very simply, gross profit minus operating expenses. And as you can see, I'm losing a little bit of money. That shouldn't really surprise you at the rate the business was bleeding cash. But I just kind of did some wags there on some of my expenses. I just did wild guesses. Okay. I'm going to upload this video in the morning, y'all. I promise. And I'll upload that Excel spreadsheet in the morning. So y'all got 72 hours to finish it up, pretty much. Right. You got 96 hours to finish it up. I'll get it uploaded for you, I promise, okay? I don't ask that your income statement be perfect because I've thrown a lot at you today. But if you can at least get it close, right, and understand that if you can get your formulas copied over, I spent half of this class going back and talking to you about the cash flow statement, didn't I? I'm going to reiterate what's on the income statement at the beginning of the next class. But you do have to turn it in to get credit for it, right? If you turn in a spreadsheet that doesn't have income statement, I'm not giving you credit for that, okay? So stay on top of things. I'll upload this. If you got questions, if you need to Zoom me, I'm perfectly willing to Zoom. I don't like to wait until Saturday or Sunday to Zoom. If I don't answer your text message or email, hit me again. I promise it's not that I don't want to, it's that it's advising time and Seth's going to be aggravating me in the morning. Okay. All right. Y'all stay safe, be blessed, and I will see you on Monday. Text me, email me, call me, Zoom me. We'll get you straight. Okay.
Where can I go to install the software on my laptop?
Do what now?
Where can I go to install the software on my laptop?
I don't know what the exact process is for you to do that. Hang on just a second for me, okay?